Good evening, guys. Ken of Tortoise Capital Nightly Strategy Podcast for December 10th, 2022. Ken H. sent me this little presentation here. We'll talk about it. What to do when another candidate starts performing better than your pick. And so he's showing the S&P in blue. The Qs are in, looks like kind of the gold. And then, no, I'm sorry. Is SPY in the blue? Or is that the Dow? Looks like the Dow is in blue. Yeah, and the Qs are in gold, and the S&P looks like it's in orange, as I'm reading that. Is that correct? Yeah. So the main issue here is, first thing is that you notice for long periods of time the Qs are in between, or the S&P is in between the aggressive, and for this whole period of time there. So that's the S&P. And when we get over to the real differentiation, you get DIA is above and the Qs are below. And so it's not unusual to see the S&P kind of splitting the difference between DIA and the Qs. For long periods of time during this growth phase, they were all moving in tandem, and from the SSC, which was down about, on average, about -4%, they all kind of gained plus 15%. In this upward move, you notice that the Qs were the stronger and pulling away, and at the peak, the Qs are up about 15%, whereas the Dow was only up about 9%. You'll notice that the differentiation was getting bigger once the breakout was occurring. This is a case of money being taken from the conservative Dow and the S&P and really emphasizing the Qs, and that's why you get that kind of money flow from the losing trades to the winning trades. Now, interesting, notice how when everything starts failing, it all fails together and they're almost identical. That means that's money coming out of the market from everywhere. There's not it's not rotating between indexes. It's leaving the market. And what's interesting to note is that the Qs lose 15% down to -9%. So the Qs lost 24%, going from plus 15 up here all the way down to -9. Whereas the Dow only lost from +9 to -9. The Dow was down only 18%. Now, at that inflection point, notice when everything hits the SSC and SSCs together, what I want you to notice, and this gets into what do you do when another candidate starts performing better than your pick. Another way to say that is, how can I pick the better performing symbol? Notice that the Dow starts at a higher level, and then the Dow is the one that is beginning to differentiate all the way up, and that's a sign of people wanting to get their money back into the market after the big sell-off, and we're looking to take the less risky trade of the conservative Dow candidates than the Qs, which sort of explains why that's the case. And then the Dow continues to move up in this region, whereas tech really just craters. So not only is one going up faster than the other, in fact, one's going up while the other one is going down, and that's evidence of a rotation out of tech and into the conservative symbol. So what I would say is, what do you do? Well, you can trade, take one position and put it on the other, um, on the basis of relative strength. You can see how that persists quite a long time. I mean, this was going from early October all the way through early January. I mean, that's 8 weeks of consistent outperformance. So rotating makes sense. Um, so he gets out of cues here. Now, should I watch for the? And now he's saying, should I watch for the next entry past the previous hump of the K2? Well, you got to remember, these are on relative percentage basis. I would be targeting the Dow and looking for specific Kata 2 entries. You still want you want the entry to conform to the technical pattern, the tactical pattern, and I think that's what you want to concentrate on, and then preferring one to the other. Now there's a slide 2 in here. Hold on. Oh yeah, here we go. All right, so this is DIA. So we have a clear support level, clear upper limit. I don't mind this trade here. Um, you have reasons to believe it can get to this price level, and if you use like a 2-bar low, or even the bottom of the dragon, it's hard to get a 2 to 1. If you go to the PSAR flip, you get about a 1.5 to 1. Um, this is the this was a this is where it became summer. So on our best day, we might have gotten a bit of an earlier entry. If you get your entry here, then it's easier to see 2 to 1 to the upside if you're using the downside. But again, you can see the difference in performance of why the Dow was to be preferred. In an upward trend with the big indexes, maybe you can relax the 2 to 1 if you have to want to get in there. Maybe this is where maybe you don't see this. I mean, you have reasons to believe it can get to this high. On the daily, it's harder to see 2 to 1. So maybe you have to dial down to the 1 hour, where the size of your risk box is going to be smaller. And then you might just use less of a position size in that case because it's more vulnerable. And you might be more of a day trader just to get this thing started. I mean, those are the two things you got to do. If you don't want to take a less than 2 to 1, then you're really kind of committed to there's a Kata 2 right there because you have a low and a higher low. You're across the dragon, the RL10 is crossed. So you should be able, I think, to get an entry in this region, and now suddenly you don't have the problem of being in the middle of the range or close to resistance. So you got to get that move earlier. That's how I would say that. Does that answer your questions? Okay. Thanks for the slides. All right, let's start with the review of the 30-period regression line slope z-scores. This is XLY versus XLP. P is still above XLY, but notice that XLY is getting a little better. XLP is continuing to slow down. The S&P did not follow through. It's still above half a sigma. It's still above the zero line, so the slope is still generally up. But both of those have clearly cooled off, and we're at a critical state as we saw last night um, during the weekly report review. And I would also just say that you know this is a modest strengthening, but it is holding out hope that the more speculative uh, symbols in consumer discretionary may be receiving money from what was the clear winner all the way up. And now maybe it gets to here, and maybe that money's rolling into XLY or tech. It's possible. So there can still be another leg up. I mean, we've seen where the S&P and consumer discretion has gotten all the way up to 2. So there's still reason to believe that could happen because we're in better conditions now than we were back 8 weeks ago. Energy continues to suffer, which holds out hope for the S&P. Finance failing, materials failing. Tech has moved up a little bit in the stack, meaning it has lost less. So that's about the last hope for another leg up is tech has room to grow. And we did see some moves in the fangs. All right, let's take a look at the different frames now. Coinbase on a long-term basis is just holding on by the skin. And that really means it's a relatively low-risk trade. I think it has to get above 43 to be of interest, to be honest. But if it does, it's got room to go, and the PSAR has already flipped. Your first target's 48, so that's about a $5. If you're using a $1 or $2 risk, then you have some room. So I'm still holding out on favorable positioning on these cryptos. Bitcoin is showing some evidence of getting some traction in here. There's his Kata 2 entry that has cleared the emerging dragons. That held pretty well. If it can get above, say, 1080, that has a chance to go. That's the key resistance. Now you've got these little markers all along the way. Looking for 11 and a quarter, 12, 12 and 3/4. Yeah, that's got room to go. It always feels like that at the start of a good move. Tesla, boy, just can't get. He's getting the worst press of a CEO ever. But it's held twice. It has run up to 195 already. I like that trade. I'd give him the benefit of the doubt. Don't bet against Elon. This is in great shape on the daily too. This is actually an improvement. The PSAR has flipped, and I wouldn't bet against him. Gold has been benefiting from all this pain and suffering in the cryptos and FTX. So you've got some Kata 2 action, and if it can get above 168, that has a real chance to go. But you have to say it's already fully valued. But both of those pullbacks were small in amplitude, and this rebounded faster, so I think there's a good chance for that to continue to go as a defensive play. It's now back in favor. Silver especially is looking good too. Procter just continues to crush. Here's the key test. If it can get above that 151, then all of that pain and suffering is negated. This is why you love the SSC and the Kata 2, why sometimes you got to hold your nose and go. That still feels ownable to me. When we look at the weekly, it's cleared this level, and we don't get resistance until 158, 162. So there's still 10 or 12 bucks available to the upside. Realty Income Corporation. Realty Income Corporation. Boy, it's fighting hard against the housing meltdown. Um, if it can break above this, this is, I guess I would call that resistance at 68.50 and 71, all the way up to 74. That's your price ladder. Still a grind, but it's come a long way, and that's a nice positive recovery. And the retracement was less than 50 cents, and it's been hitting higher lows consistently. This is the test here, though. It's got to get above that. So I think it's worth a shot. The Qs still stuck in this trading range on the daily, and solid support at 280. But this was not very promising. The last 2 days of last week were just wasn't much hope for the wicked in there. So it's got to get above 286, then it has a chance for 295. Tough. I would be more comfortable being short if it violates 280, to be honest. But this could be just a nice grind right there. That's where the market's placing its hopes, though, I think. Cisco has been pretty good. I like that exit, to be honest, and to get a fresh start. That was quite a give back from 50 to 48 on two positions. So I like that you held no over weekend risk. This was not a persuasive follow through because it was already over the hump, but it just couldn't hold it, and it had two significant sell-offs in there. I like that exit myself. We'll see if it can maintain leadership in the tech sector. It's like, so the old school techs like Cisco and IBM have been doing better than the younger guns, but we'll see. This has been a real sleigh ride here in NVIDIA, but it's above key resistance, and we can look for 185. I think that's a great entry. I think I'd make sure my stop was probably, I think right there. I think you got to give it some room to work, but not too much. Make sure you lock in that gain. Netflix. That rising triangle, yep. Caught a twos, but still a wild ride. Oof. Lots of room on the weekly before it gets, say, 380 to 400. So it's got about a plus 80 in gains. And, if you could buy it here at 325 with a stop at 305, that's a $20 risk for an $80 gain. That's 4 to 1. Yeah. I feel like they should do well if we get another COVID scare, which I'm starting to see. U.S. Steel. Didn't take the second entry, took it here. I like that you got to get out there and you're able to bank this. That's in good shape. I wouldn't be short unless it breaks 25.40. Then I would be short. And I like it on the PSAR flip, though. If it can break above, I want to get in earlier than the breakout above the statistical high. 27 is the crucial support on the daily. And that's also where it went into the summer on the weekly. Again, if it can get above 27, this is not resistance. This was all just panic selling. You don't get resistance until 38. So 27 feels like the real challenge. That's one that we're going to be paying great attention to all week. Because as U.S. Steel goes, so goes the rest of the steel sector. STD is basking along in that joy. Great entry. With a stop here, you could tolerate that, and then that's a nice move. A couple Kata 2s all the way up. It's at an all-time high. I still like it. I think I would hold that one until I saw a real confirmation that U.S. Steel and Nucor and Cliff were all suffering. I really like that trade. Good find. Devon Energy. There's more pain and suffering available in here as gas prices continue to drop. Um, that move from 78, kind of stealthy, all the way down to 60. Ouch. That's almost 28%. It's still holding above this support level. The Dragon support level is right where it's at. Um, that this little sell-off creates a lot of opportunity space for a rebound, but we're not close to seeing a rebound in energy yet. The only thing you could say on a longer-term basis is this is about where it should find support, but short side for sure. The long side would be a grind. You'd have to see a turnaround in energy prices too. ExxonMobil also suffering like the rest of the energy sector. It's trying to hold steady, and if that doesn't work, then 100 is in play. So that's about a -4. Yeah, there's a 2-to-1. If you have a $2 risk and you're looking for 4 to the downside, the short side trade is certainly there. And that just that would put it right back into this trading range, really all the way down to 85. Then you have a trading range that you've just entered, and then you can see when it's in that trading range what a nice short-term swing trade it is. So it's getting ready to become interesting again. And then on the other hand, on the upside, if it can get above 106, it's got room to get back to 112. Nothing wrong with that. Natural gas. Boy, that when it broke below 19, all the way down to 17, what a nice recover. 1, 2, 3, brave trade that would have been. I think there's more in this. It's just entering this trading range right now. It's clawed its way back, so there's another $2 available up here. You'd have to take that with about a 50-cent risk. Good swing trade candidate there. Walmart. This is the one that's a real disappointment to the staples, the XLPs of the world, because these two support levels, it broke out, but now it's sent it all the way back, 6 to 7% loss. If that breaks, I think there's a reasonable trade down here to 141. But if it's got to hold here, I think you got to start that off as an intraday, and I would play just the first day of upside as an intraday trade. I wouldn't swing off a 1 day of recovery. I'd like to see the second day before it becomes a swing. But that's a significant enough pullback to get some value players interested. Merck and the entire healthcare is just getting it all done. I mean, holy mackerel. Second position, Kata 2s all the way up. If it breaks above 111, I could see adding even another position because that's an all-time high. But meanwhile, you've got, I think if your stop's around 108, then both of these entries are in the money and you've given it a reasonable room to work. What a trade that has been. Wow. That's why the Kata 2, it's never too late. You can always take Kata 2s. Gilead Sciences, also in that healthcare biospace, feels pretty good. I'd have my stop at 87 just and love it. And above 89, just go. It's an all-time high. And you want to play that momentum. And you've got markets money to do it with. Nicely played. Treasuries, I love that exit to this. This has been such a strong move that when it broke the PSAR, you got to get out of that one and make bank on this one. We've gone from 90 all the way to 110. That's a plus 20% move, halfway back up the stack to here. So let's see it hold around north of 105, and I'm a buyer inside there um, if we see an SSC or a Kata 2 in there on the hourly. I'm a buyer, and if it gets above 110, I'll add a second position. Last one, Coinbase. I think we saw Coinbase already, but yeah, I think that everybody that still owns it there will never sell. That's all the insiders. So that's the lowest risk trade you could ever get, and then the short side trade is easy to see as well. So Coin to me is actually an ideal trading candidate, and you're seeing the sympathetic suffering from the FTX scandal. I posted a good video interview of that from Lex Friedman and a kid named CoffeeZilla who does fantastic work of holding fake gurus accountable. So I encourage you to listen to that. It's on the Patreon site. All right, that's everything for today. We'll get this published and posted and see you storytellers in the morning and getting ready for Monday. Take care.